Let me welcome on the show the Managing Director of Hindalco, Mr. Satish Pai. Satish Pai, thanks so much for joining us. Now, good set of numbers for Q4, but the world has completely changed from Q4 to now Q1. COVID has hit India, and overall, globally, the recovery has been fast. You are present in the outside world in a big way, and you have operations in India. Tell me, what are the few key drivers which are going to define your performance for the present quarter?
So if you look at quarter one, first of all, I think Novelis will have a very strong quarter again because frankly, the demand in the Western world, US, because of its stimulus, UK coming back, Chinese economy doing well. So Novelis is going to have a pretty strong quarter. The only little niggle that they have is this shortage of semiconductors, which you must have heard about, is impacting many auto companies. So some of their auto customers are going to get a little bit, the demand is going to get hit because of this semiconductor shortage. But generally, Novelis in Q1 should have a very good quarter. I think in the Indian business, the numbers will look good, but I have to admit that the months of April and half of May have been pretty tough in India because large part of our customer base, their employees have been impacted by the second wave. But I think overall, because we will export a little bit more than sell domestically, and because LME is higher, we really think that Q1 will be a very strong quarter for us. I think the key thing that we are watching for is that the demand in India, which in Q4 had reached 1,077,000 KT for aluminium, all-time high. In Q1, we hope it will not be much impacted, and by June, July, it should pick back up. So that's the trigger we'll be looking at. I think from a cost point of view, as you said, costs are going up, and we think that the cost of production of aluminium in Q1 will be 4% higher than Q4 because CP coke, pitch, coal, all those costs are now starting to go up. So cost inflation is coming in. Luckily, the LME is going up at a much higher rate than our cost.
Right. LME is going up, but tell me about your hedging strategy, because that cautious approach in a rising LME environment doesn't augur well. So how much of a hit to your realization would you be taking, or have you changed your strategy? So give us a sense on that mechanism, because your upside could be capped because of a hedging strategy here.
You're absolutely right, Nisha. I think in Q4, we had a record quarter, but it could have been even higher if it had not been for a hedging position. But I think that what we are doing in Q1 and for this year is our hedging ratio is much lower, because in a rising LME market, we will keep a larger portion unhedged. So as you said, the hedging percentage this year is going to be half of what it was last year.
Right. So hedging position will be half, so you'll take into account the higher upside, and it will impact you in terms of your realizations?
Yes, I mean, if the LME prices continue to go up and we have left a large portion unhedged, we will benefit because we'll get a much higher realization.
All right. So that mix of hedging is also a big thing. But when we talk about LME prices, before I go to copper, is there a strategic shift when it comes to the world aluminium order? Because Shanghai prices are trending higher than LME. And how do you see this particular change? And do you think that now markups can be made as per Shanghai index?
So fundamentally, what has changed is that China, because of its ESG commitments, has capped the amount of aluminium smelting that they will allow. And they are publicly saying it's around 45 million tons. Now, that is going to be putting a very firm pricing on the aluminium floor. So for the first time, the SHFE is about $100 higher than LME. I have to remind you that for all this time, SHFE used to be $200 less than LME. So is this a structural change that's going to continue? We'll have to wait and watch. But as you said, the fact that China has put a floor on how much smelting they'll allow, and the fact that their internal demand and in the rest of the world continues to be high, says that aluminium prices are going to be structurally higher for the next couple of years now.
All right. So yes, Indian demand could be a worry, but you have a larger global footprint, and there you can benefit. Talking about copper, then for the past several quarters, the copper, overall performance has been quite erratic. Last quarter, you did well. How is it looking in the Q1?
So you're quite right to say that there's been erratic, but as we also said, we took a smelter one shutdown at the end of Q2, Q3. And then Q4, there was no shutdown, so we had a very good performance. In Q1, we are taking a smelter 3 shutdown. And once that shutdown is over, so Q2 onwards, I'm very confident that the copper is going to be a very steady performance, because we would have then taken both the smelter shutdowns, and we have, all the things on maintenance point of view taken care of. So I'm quite confident from Q2 onwards, the copper performance is going to be very steady.
All right. I asked you again once, Satish Pai, because for several quarters, the way the copper has been performing and also giving surprise, a market is now building in that is the copper business of Hindalco really acting to the full capacity and full potential, or is there a lingering problem? If you can clarify that again.
I don't think so. I think that I'm very confident that once this shutdown of smelter 3 is over, because we have already done the refurb of smelter 1, both our smelters will be running at full capacity from Q2 onwards. So I'm quite confident, Nisha, that there is no lingering problems. We are going to have good copper performance from Q2 onwards.
All right. So that's good to hear. And capital allocation wise, now you've done quite a big debt reduction, and deleveraging has been part of your strategy. What is it that's lined up for this financial year? CapEx, what is lined up? And also you have a new dividend policy in place. So in these 3 areas, how are you going to allocate your capital for this financial year?
So we have followed what we communicated to the street in February. So first thing we said is that we will delever. So we paid down the 1.1 billion bridge loan that Novelis had. So Novelis has paid about 1.7 to 1.8 billion of debt in the last 6 months. So that's why if you look at our net debt to EBITDA now at the end of March, it's 2.59. So we have come back to the same net debt to EBITDA level pre the Aleris acquisition. So at least check on the debt reduction. The second thing is, we said that we are going to do a shareholder return at 8 to 10% of the free cash flow after maintenance capex. So that's why we have now announced a 3 rupees per share dividend, which is 3 times our normal dividend level, and that's going to be the sort of level we'll continue on for the next few years. Then the third thing we said is that whatever cash we have available, we'll put into organic projects. So capex in India is now 2,700 crores. We have announced Novelis is going to spend 600 to 700 million in capex. So we are now going to work on organic projects. Novelis is going to do the China Xinjiang cold mill, which is a part of our strategy. And in India, we have announced the Silvassa extrusion plant, and we are going to announce a rolling plant upgrade in Hirakud in Odisha soon. So we are following the capital allocation framework that we communicated in February.
Right. And what is your plan for deleveraging for this financial year? How much do you want to end the year with, given your internal cash generation and reduction in debt from the cash that you have?
So our plan is, we have communicated, we would like to be in the low 2s of the net debt to EBITDA. So we are at 2.59 at the end of March. I think this year we will get to that low 2s level. So Novelis will pay down another 600-700 million, which was communicated in February. And then with the cash flow generation, the net debt should come down more. So we'll be in the low 2s at the end of this financial year.
Satish Pai, you have been very emphatic in saying organic expansion. So looks like with Novelis and Aleris, you're full up when it comes to any more acquisitions.
So look, any large acquisition, we have realized after the Aleris that we will run into antitrust problems, because we are quite a large player in most of our end markets. So we will have to do organic expansion. We will do small bolt-ons, when it makes sense, but larger expansions is no more a choice for us. because we'll have a lot of antitrust issues. We
Right.
realize that.
Right, you become so big, and being big has its own set of problems, it seems. But where is the organic expansion going to come from? Which areas have you identified? Because a lot of these dynamics in the different sectors you feed into have changed across the world in the COVID times.
So we think that, organic expansions, we still have space to grow in auto. We are now full up, and the can demand is growing at 5 to 6% a year, largely because of sustainability concerns, replacing PET. So can capacity is something that we'll have to look at. And the third thing is recycling. We are at about 60% recycling, but we would like to do more recycling. So there's more investments we can do to put recycling capacity in place. So these are the three areas that we will expand in. And in India, on the downstream side, extrusions and rolled products, organically, we are at about 300 KT out of 1.2 million tons of primary aluminium. So we want to go to at least 600 in the next 3 to 5 years. So these are the places that we'll expand in.
All right, so that's charted out, but also our world is moving towards electric vehicle. What is the kind of business you already have over there, and what is the potential, and what are the efforts being taken by the company?
So electric vehicles by definition need to be lighter so that they can get more distance. So they tend to be more aluminium intensive. So most of the big EV players in China and in the US are big Novelis customers. So as EV grows, the rolled products demand for aluminium keeps growing. The second part that we participate in is the battery enclosures. So the battery takes a large part of the weight, and the battery enclosure now is more and more being made out of aluminium. So Novelis has got a unique solution for the battery enclosures. So these are the two places on the EVs that Novelis benefits from.
Right. And what is the expansion plan there? Any projections on that particular area?
So look, we have just commissioned 200 KT in Guthrie in Kentucky and 100 KT in China. So this has just been commercialized in December, January of the previous year. So this 300 KT, now we will be filling up with new customer orders. So we have just come on the market. So our aluminium rolled products capacity in Novelis is now 1 million tons, which used to be 700. So we have added 300 KT just recently.
Yes. All right. So that expansion is already there and built in. But another kind of aluminium which is really gaining momentum now, Satish Pai, is the green aluminium.
Green aluminium.
And if decarbonization is impacting the Chinese, it is going to impact the Indian companies as well, and your avatars in the overseas market. What are you doing there to become more green? And what is the kind of material impact on the company in the interim while you move towards more sustainability?
So I think as you said rightfully, that green aluminium, meaning basically reducing the carbon footprint of aluminium, is a big international driver. But the approach that we are taking is that you should not just look at one part of the aluminium chain. You should look at the full circular economy life cycle of the aluminium products provided by Hindalco and Novelis together. So we look at it from mining right up to an auto sheet or a can sheet, and include recycling in it. So what we have committed to is that by 2050, we will be net carbon zero footprint. So it doesn't mean in smelting we will be zero, but in the full cycle of our product chain, we will get to zero. So we will recycle more. We will do more things to get the carbon per ton in the smelting down by using renewables, by using gas. We will be doing bauxite residue recycling. We will do zero water discharge. So we have a full plan that shows that how Hindalco is going to be on the ESG side, a world leader.
Right. No, so I want to stop you there because yes, these plans are in place and we have a long-term plan of 2050. But I don't think you and I would be there by that time to really see it into materializing on the ground. I wanted to understand, under your leadership, give us a more closer target when you're going to achieve a few things. And I do understand the whole sustainability thrust towards the whole cycle, because not just about one cosmetic change in one vertical, it has to be done end to end. So that, yes, is a massive process. One particular lever by which you can judge also your green thrust could be the component of green energy used in the production of aluminium, and how are you reducing that, reducing the dependence on carbon emission on that particular front. So what has been the target, and if you can articulate the future ESG targets as well?
So first, let's, in our investor presentation, which we just did, we now give very detailed year-by-year progress on emissions, on zero water discharge, on waste reuse, and biodiversity. So each one of these, if you look at our presentation, we give an annual progress. So yes, there is a 2050 goal, but we are giving the progress every year that we do. We are committed to 100 megawatts of solar to be up and running by 31st of March of this financial year. So that is one specific target. We were at 50 megawatts last year. We are going to add 50 megawatts more of solar. We are going to be one of the first companies to put a wind, solar, and a battery in the hedge, so that you can start to use about 85% PLF. Solar can only work in the day, whereas if you put a battery in there, so we are going to put that project in the hedge. We are also looking at gas, and we are trying to refit our boilers to fire gas. Of course, we are working with the government to get the gas pipelines in place in Odisha. Unfortunately, because of COVID last year, the pipeline got delayed, but we are hopeful it will come up. So we are now at 83% of our 2015 specific energy consumption level in our smelters. And every year we are planning to take it down by another 5%. So as I said, we have a 2050 target, but we give our shareholders every quarter an update with specific results on each one of these.
And will it impact your margins going forward also as you make that shift?
So for example, I'll just give you, this year, we are going to spend 200 crores of cost in shipping bauxite residue to cement plants.
Yes.
So this is an additional cost of 200 crores just for bauxite residue. But I think that, the way we look at it is this is going to be a license to operate, because today, Hindalco is now about 70% of our bauxite residue is recycled. Soon we'll be the only company in the world with 100% recycled. So we think that these are things that are going to be beneficial to us. Yes, there is a short-term cost impact, but we will have to swallow that in the larger goal of becoming a green company.
That's right. And it cannot be taken as an expense and more as an investment for the future. Satish Pai, thank you so much for joining us right here. And have a great day. I just hope that entire Hindalco family stays safe in these difficult times.
Thank you, Nisha.